Hey folks, welcome to Market Wrap Clips. This is where we give you a preview of our market wrap that we send out to members Mondays through Wednesday evenings, along with the Saturday edition called the Week Ahead Commentary. We'd love you to take advantage of our 14-day free trial offer. Become a member, take advantage of our analysis of the markets as well as our trade alerts and our new money flow measure of how the algorithms are buying or positioned for major moves in either equities, commodities, indexes, etc. So if you're not ready yet, please enjoy the video, enjoy the clip, and join us on our live streams. We have a link below. You could enter your email address and get our 5-part video tutorial on the 5 top favorite candlestick patterns. When you do that, you'll get alerted about 45 minutes prior to us going live on Thursday nights and again on Sunday nights. Sunday nights is when we review the opening price action of the futures market, 6 p.m. Eastern Standard Time. Thursday nights, we review the weekly charts and how we're poised to close out the week. Again, 6 p.m. Eastern Standard Time. So join us. Again, link below if you want to join a 14-day free trial offer. If you're not ready yet, cool. Join us on our live streams. Get to know me. I get to know you. Now, enjoy the clip. Okay, folks, welcome to Market Wrap for the 27th. Okay, so we had a rally in the market today. What caused it? What happened? Well, I would argue that it's both technical in nature and you had some economic data that caused the rally, but that economic data that caused the rally may be a double-edged sword, so stick around. We're also going to talk about platinum. Platinum, we've been talking about the machines, the algorithms being extremely short, both long and short term of platinum. I think that we're beginning to see the beginning of an inflection point, meaning what we like to do is we want to take the flow of funds data from Goldman Sachs and TD Ameritrade, look and see what's extremely oversold, what's extremely heavily shorted, and is the chart looking ripe for a massive short covering rally? I think that platinum, which we've been talking about for a couple of weeks now, is finally nearing that inflection point. So we're going to do a deep dive on platinum in a few minutes. We'll leave that as our last chart. But let's talk first about the markets today. Big rally in the markets. The Qs were up 1.72%. Now, I was talking with one of our members earlier, and he said, do you see a bear flag setup? Initially I said no. I saw a bull flag setup, but I understood what he's referencing was in red is the potential for a bear flag setup. When is that negated? It is negated when we break out and above prior highs at 372.34 on the triple Qs. When is it validated? Well, it's validated whenever we break down below this lower band of support in red. Now, the problem with this chart, it may be just a one-day problem for all we know. The problem is that volume was horrible today. I mean, in fact, today's volume was lower than yesterday's down volume. And I warned yesterday that the volume on the Qs was not heavy. There was no real significant institutional distribution and that we could get a reversal, and that's what we got today on a turnaround Tuesday. So that's the technical perspective of why we saw a rally today. What is more of the catalyst? Well, the catalyst is this. U.S. durable goods orders unexpectedly soar in May. Big number, right? That's really good stuff. Strong economic growth, blah, blah, blah. There's a problem that comes along with that. Before we go to the problem, let's talk about who benefited. The Dow Transport. You ever wonder why a sector or a stock leads the news by a day? Well, it's probably because that news that is secret from the public is public to the powers that be. Because yesterday, after seeing a breakout point failure on Friday, we had a breakout on the Dow Transport and a continuation breakout today up 2.70%. This is a major move. And the volume on this breakout was massive. Huge, huge volume. So this has legs. Now, why would the Dow Transports rally on this number? U.S. durable goods. Well, remember what U.S. durable goods represent. They represent washing machines, dryers, etc. The housing market, the new home sales are doing very, very well. What do they need? Washing machines and dryers. Obviously not just limited to that. That's usually my go-to example for a durable good. Now, what else did well today? FedEx did awesome. One of the transport components, up 5% on the session, a major move up higher. What else did well? Lowe's, Home Depot. This is Lowe's, up over 2.5%. Why? It's because they sell the things that go into homes, durable goods. What else was up today? Worldwide Wrestling Entertainment, WWE. What does it have to do with durable goods orders? I have no idea. Leave a comment below if you do. All right. So what's the double-edged sword? Where do we see trouble for the markets? Well, the problem is when you get good news is that the probability of a Fed rate hike in July grows. And yesterday, one day ago, the markets had expected a 74.4% rise or probability, I should say, in the Federal Reserve raising rates in July. It went higher today to 76.9. That is not stock market bullish. And to illustrate the point even further is this. When you take a look at the 10-year yield